And as a nice dovetail to the last act, Richard Goldhar is here tonight to talk to us about insolvency. He started his independent insolvency company to make professional debt solutions more accessible to people across Southern Ontario. And he believes that too many trustees lose sight of the real agenda, which is supposedly to help people get their financial lives back on track. So he's here tonight to answer your questions, whether you're wondering how to get out from under all the consumer debt that you're drowning in, or you just want to know what your options are because you have too many bills and not enough money. You can give us a call at 416-872-1010 or on your cell phone at star 8255. As Mike Catherwood says, the lines are open and operators are waiting for your calls. 416-872-1010 or on your cell at star 8255. Give us a call. Hey, Richard, thanks for joining me tonight.
Good evening, Gail. How are you?
I'm good. You must be seeing more and more of this because I am getting a ton more letters from people who are saying, often I get letters from people where I can answer the question and that will help the problem. But now I'm getting letters that are so desperate, I can't do anything other than refer them to a bankruptcy trustee.
Yeah, we're seeing that more and more as the days go along. Consumer debt is easier to obtain these days, and individuals' jobs are less and less secure. So often we're finding people with more and more troubles.
So, how do you know when it's time to seek professional help? What are some of the signs that, because you don't want to wait to the point where you feel like your life is just sucks?
Yeah, agreed. So I guess some of the signs that you see is generally when they're a few months behind in their credit card bills. Other signs is when they're robbing Peter to pay Paul, as they always say. There's signs that you're looking for is when their families are unable to pay for their ongoing bills on a regular basis, food, housing, shelter.
I usually say to people, if you can't pay your bills, if you can't keep a roof over your head and food in your children's bellies, it's time to go see a bankruptcy trustee.
Absolutely. That's one of the key signs. And another one, too, is sometimes if they owe debt to the Canada Revenue Agency, there's oftentimes when they get to a point where it's just very hard for them to get themselves out of that trouble. And that's another key sign before they have a wage garnishment. Okay,
so if you have questions for Richard tonight, 416-872-1010 or on your cell at star 8255. What kinds of debts typically are dischargeable by bankruptcy?
Yeah, the debts are typically dischargeable are what they call unsecured debts. So debts from credit cards, lines of credit, overdrafts, payday loans, those type of debts.
So, not necessarily the things that are attached to things like your car or...
Correct. So like a car loan, a mortgage, those type of debts are typically not dischargeable by an ordinary consumer proposal.
Okay, let's take a call from Louise in Etobicoke, who's on the line right now. Hey, Louise, thanks so much for joining us tonight. Louise? Well, Louise wanted to know if it's a good idea. Her son is... Louise?
Yes, hello.
Hi, thanks, my love. Thanks for joining us tonight.
Oh, thank you. It's really an honor to speak to you, Gail. My son had bankruptcy once, got his act together, and now, I don't know, he's got like $30,000 debt again, and
Apparently he didn't get his act together, Louise.
What's that?
Apparently he didn't get his act together. That's just your loving mother.
I know, terrible. It's embarrassing.
Well, you shouldn't be embarrassed. First of all...
A second bankruptcy.
Yeah. First of all, you shouldn't be embarrassed. Life happens. And Richard's going to tell us what the implications are if you declare bankruptcy for a second time. Go ahead, Richard.
Hi, Louise. So this evening, don't be embarrassed by having to declare a second bankruptcy. There was amendments to the 2009 Bankruptcy and Insolvency Act, which allow for a second-time bankrupt to get discharged automatically out of bankruptcy. So clearly there must be enough people out there that require a second-time bankruptcy. So I wouldn't be embarrassed whatsoever. They obviously made amendments for a reason.
Okay, so That's a really good point. This whole idea that more people are facing second bankruptcies, and so the rules had to be changed because there was just no way they were serving people anymore.
And Louise, there's also other options that he could be seeking, so he should look at all his options prior to filing.
Okay, so let's talk about those. Other than just bankruptcy, what are some of the other options, Richard?
Absolutely. So there's what's called the consumer proposal under the Bankruptcy Act, and that quickly is the consolidation of all the debt to one easy payment payable over 60 months at a maximum, and there's no future interest charged from the creditors at that time. And he'll get all the same protections as he would have gotten otherwise in a bankruptcy proceeding.
Okay, except for the fact that if you do a consumer proposal and you can't meet your payment commitments, you get kicked out of the proposal system, right?
Well, your proposal could be annulled if you don't make the payments for 3 consecutive months or 3 months in total dollar values.
Mm-hmm. The other thing is that the bankruptcy one will take into account your fluctuating income, but the consumer proposal won't take into account your fluctuating income, will it?
Right, which could be great, right? Because once you strike the deal, it's struck in the moment of time, and as long as you keep up with your commitments to pay the proposal, upon the last dollar being paid, the debt in the proposal will be discharged immediately.
But if your income goes down, you're still stuck with the higher payment.
You are. However, if your situation changes materially, you're always welcome to come back to my office and talk to us, and we could always file what's called an amended proposal along the way.
Okay, that's good to know. So that if, for example, you do a consumer proposal and then you end up having your hours cut at work or whatever, that's a good alternative to know, right?
Absolutely. And then, if the debt isn't that substantial, there are always informal options in order to deal with the debt.
If you want to speak to Richard tonight and ask a question, 416-872-1010 or on your cell at star 8255. People, if you have questions, ask them now. Because the thing is that, there's no point in remaining in the dark place of ignorance. If you need an answer, ask now. So what happens if you go into the insolvency process? What does that look like for me participating?
If you're participating as the person filing the insolvency.
Going bankrupt, yeah, or filing a proposal.
Yeah, so it will affect your credit rating, but it can also bring you calm because it brings everything to a level playing ground. So that way, you know exactly how much you're going to have to pay to get out of the problem. And at the same point, you also know how to rebuild your credit because part of the insolvency process is that as a trustee, we have to help individuals reestablish their credit and have to reestablish their position in life so that we can feel confident on their discharge that they are getting in the right position and hopefully won't be back in the same position twice. So it does happen.
I have to tell you, there must be a lot of bankruptcy trustees out there that are not doing that part of it because I get letters every single week from people saying, I've discharged my bankruptcy. How do I rebuild my credit history now?
Yeah. Well, we've done an incredible job with our research and development and making sure that our program is set to the highest standards applicable to the Bankruptcy and Insolvency Act. So hopefully we won't have too many second-timers from us, Gail.
Well, and this is the thing is that you would think having gone bankrupt once, you would have learned the lesson that consumer credit is not your friend.
That's a good point, 100%. But sometimes life does throw those nasty curveballs, and it's really unfortunate when you have to deal with an ill parent or sick relative or a child that unfortunately is unable to pay their bills, and you sort of get sucked into helping them out.
That's absolutely true. And, for a lot of people who find themselves in those circumstances, that's exactly the point of the bankruptcy protection. It is meant to help those people get back on track. Let's take a question from Dino in Markham. Hey, Dino, thanks so much for joining us tonight.
Hello.
Hi, Dino.
Yes.
So you have a question tonight?
Yeah. I have a limited company that has debts.
Yes.
How liable am I personally for the company's debts?
Did you sign on the debt personally, or is it only the company that's liable for the debt?
Company.
Okay, so go ahead, Richard.
Okay, so if the company is the only one that signed for the debts, then the company would be responsible for those debts, with the exception of Canada Revenue Agency debts for HST and payroll source deductions. Otherwise, you can always do an insolvency of the actual numbered company, and that should relieve you personally of any potential liability because the company itself will have declared the bankruptcy process.
Yeah, that's what I thought. That's what I thought the purpose of the limited company was.
That's exactly the purpose. But a lot of people, a lot of banks will not give limited companies credit without their shareholders signing on the dotted line for said same credit, which keeps the owner on the line for the debt. So you have to be sure you're not liable personally by having signed personally. Okay, Dino?
Landlord, the lease, I think was under my name. Maybe just the lease on the store. But
okay, so anything that you have signed for personally, you will still be liable for personally. Because this is one of the reasons why when people are going to business, they often ask their partners to get independent legal advice because, they do things like put their houses up or their houses become at risk for the business that they go into because they signed personally for that debt. Good luck with that. I hope everything works out for you. Okay, so, Richard, I got to go to break. And when I come back, I want to talk to you a little bit about what kinds of assets are affected by bankruptcy and which ones you just get to keep. Okay, so stick around.
Yep.
I'm Gail Vaz Oxlade. You're listening to The Late Shift on In-Depth Radio News Talk 1010.
She just gets it and wants to give it to you. Now more of The Late Shift with Gail Vaz Oxlade on News Talk 1010.
So Richard Goldhar has joined us tonight, and he's helping us to understand the ins and outs of bankruptcy and consumer proposals. Mark is on the line, Mark from Milton. Hey, Mark, thanks for joining us tonight.
Thanks. I have a real easy, difficult question. It's a debate going on in my family. When I finished school, I had about $50,000 in debt and no sign of being able to pay it off. Actually, I was actually watching one of your shows. I knuckled down and went and lived strictly cash, and I paid it off. And I lived, if I couldn't pay for it cash, I didn't buy it. And now I'm 40-something, debt-free outside of my mortgage. I don't have a nickel in savings, however, because all it went to paying off that debt. My nephew is now in a situation where he's finished school. He didn't qualify for government loans, so he had to take loans out because his parents earned a little too much. And the debate now is he wants to file for bankruptcy because his attitude is if he files bankruptcy, when he does finally get a job, his money can go into savings. So when he's 40-something, you'll have money in the bank savings versus paying. So, but I'm wondering, I think that's going to destroy his credit in the long run. And I'm just wondering what makes most sense.
Okay, so Richard, here's a young kid who's graduated from school with $40,000 worth of debt, but it's not in the student loan system, so he's not hampered by that. Does it make sense for him to do a bankruptcy and discharge that debt now so he can start with a clean slate, or what are the implications?
Okay, so as a trustee, I would always look to the fact to say, what's his ability to earn income? If he's gone to school and unfortunately the degree he's received to date does not allow him to get a job in that sector, and the job he's going to have to obtain would be one that might pay at a lesser wage, he might be in the right direction to say, I have to discharge this debt because I won't be able to afford to pay it off in the ordinary course of my employment.
Right.
However,
so just so that you know what a number would go with this, if he owes $40,000 and he plans to pay it off over 5 years, it would cost him almost $670 a month just in principal, never mind the interest. So That's the kind of number that we're talking about. Go ahead, Richard.
So I would assume that potentially this could be a ripe candidate for an insolvency proceeding because maybe it wouldn't be a bankruptcy, it could be a consumer proposal, so we could bring the amount of debt to a manageable level. And I would probably sway him to maybe consider a consumer proposal so that at least he has the inner sides to say that he is repaying a portion of what he could afford to repay.
But come on, Richard, consumer proposal, bankruptcy. When it comes to his credit history and his credit score, it doesn't really make that much of a difference, does it?
It does. It does not make too much of a difference. I agree with you. But at the same breath, I think you would want to look at this individual and say, in the shorter term periods, he would want to discharge himself of all this debt and start to save money so that in his future years he would have money for other matters in his life.
Okay, so let's talk a little bit about the kinds of debts that can be discharged, because I made the distinction that this young man did not owe any money to the student loan system, because I know there's a rule around student loans. So let's talk about what can be discharged and what assets are not affected by bankruptcy.
Right, absolutely. So the debts that could be discharged are unsecured debt. Debts that are in the Canadian student loan system, unless you've been out of school, end of school date for 7 years or longer, are not dischargeable automatically in the insolvency proceeding. Mm-hmm. However, if you've been out of school for 5 years or longer, you can apply the bankrupt or the debtor doing the consumer proposal can apply to the court system and see if they can prove their application for hardship and have that debt removed.
So, for instance, if you've been out of school for 5 years and you haven't been able to find continuous employment, or you have become ill and you can't make your payments anymore, it would make sense for you to go through that process.
Correct. Or if you have a job, like I said, a lot of the ones that we're actually seeing go through right now are ones where an individual goes to school, making this up, maybe for an English major, and is unable to obtain themselves a job in the English faculties or English type of job hunt. And as a result, they end up maybe with a minimum wage employment type of position. Those type of ones would potentially need some help. Okay.
Now, what kinds of assets don't get attached in a bankruptcy? Because I know there are some assets that are protected.
Absolutely. So there are, in every province, it's provincially legislated, even though the act is federally legislated. So, for instance, in Ontario, tools of the trade for individuals that do that type of work are allowed to have $11,500. Cars are exempt up to the value of $5,650. There's other types of assets similar to that type of nature as well.
If you are living in a home and you're up to date with your mortgage payments, is it likely that you'll have to leave your home?
So as long as you continue to make your mortgage payments, the likelihood is that the mortgage company will be happy to let you stay in your home.
Okay. But if you have any value in the home, then they might insist that the home be sold so that they can recapture the value to pay off the debts, right?
In a bankruptcy, the trustee would ask you to make to make a settlement with the trustee to pay out any residual equity. And in a proposal, we'd be calculating the value of that equity when calculating out the proposal.
So if you have built up some equity, that can actually work against you.
I guess it could, yeah.
Okay. How about things like RSPs?
Our RSPs are exempt from seizure and bankruptcy. Our ESPs, however, are seizable by a trustee or a bank, or in a proposal, they're valued into the value of the proposal. Because
what a lot of people don't realize about RESPs is that even though you have named beneficiaries on the RESPs, like your kids are named on them, the money is actually not your children's money until the first payout happens. And correct. So, in fact, the trustee considers that money to be your money still. It actually is your money still.
It really 100%. That's what it is. It is the benefit of those individuals that actually own the money.
Yeah. Anything else is non-touchable?
So what I always tell people is life insurance policies, please make sure that you have beneficiaries on them. Because if there's no beneficiaries and God forbid something should happen to you during an insolvency proceeding, it will form part of the trustee's pool of money to distribute.
What a good point. So, make sure there are beneficiaries on your life insurance policy. Don't just leave the money to your estate, because if you croak, then that money will end up going to the trustee.
Yeah, absolutely.
Okay. What's the biggest mistake or misconception people come in with?
The biggest misconception is that they're never going to get credit again.
It might take 7 years.
You know what? There's actual lenders out there that will give you credit instantly upon filing a bankruptcy. And within
but you will pay through the nose on the interest rate.
That's absolutely, you could be paying through the nose, but it's so competitive today, Gail. I'll tell you that I think the interest rates on the subordinate lenders today are coming way down. At one time, I think they were very, very outrageous. I think today they're probably less outrageous.
Right. How many people coming to you today with pay advance loans forming a big part of their...
I tend to comment to people that that's probably our highest number of reasons for people to go insolvent today. Because I think the interest rate on those on a per annum basis, don't quote me, but it could be somewhere north of 500% when you actually look at it.
They're somewhere between 700 and 1,000%, my darling, because I've done the calculations.
Yes.
Yeah, it's just outrageous what they charge. And, you know, our government has absolutely no sense that they need to step in and do anything about them.
I think they actually carved them out of the act when they did the usury update. So
yes, they did. So, you know, there we go. Your bookie can't charge you over 59%, but your pay advance loan store certainly can.
Right, exactly.
Yeah. Listen, Richard, it has been great of you to come on and talk about bankruptcy and consumer proposals for people and answer their questions, because this is something that I think we're going to see more and more of in the next little while. Certainly, I saw an article out of the U.S. the other day saying that the U.S. Federal Reserve thinks that interest rates will go somewhere, they're at 0 right now in the U.S., and they think they're going to go to about 3.5% or 4% over the next 4 years. And if that happens, I expect there will be a lot of people coming through your doors.
I would agree with you. I tend to agree with you.
Yep.
Well, Gail,
so thanks again for joining us.
Thank you for having us. We look forward to speaking to you shortly.
Okay, you take care.
Bye-bye.